Ethereum is going to start self-destructing in just 76 days. Yes, it is true. In 76 days' time, the London hard fork for Ethereum is going to take place. That hard fork is going to include EIP 1559. This is an Ethereum improvement proposal that is going to bring in fee burning to Ethereum. So every time that you transact, or I transact, or anyone else transacts, sending a stablecoin, buying an NFT, using a smart contract, just moving Ethereum from point A to point B, every single time that happens, a little bit of Ethereum is going to be destroyed forever. Burnt, gone. So in this video, I want to discuss with you what this means for Ethereum and what you need to know as an investor and how this is going to change Ethereum forever. My name's Lark. Every day I make videos talking about cryptocurrency, so if that is a topic that you would like to learn some more about, make sure you subscribe to the channel, whack that thumbs up button, and of course, click on the notification bell to know when I put out a new video. By the way, every single week I produce an investor report called Wealth Mastery. Every single issue of this report, we do a DeFi tutorial, an interview with an industry leader, technical analysis looking at the big picture of the market, a trending coin analysis, a deep dive report on an altcoin, and much, much more, all for less than $10 a week. Just click on the link down below me here in the description where you can learn more about becoming a member today. Now let's go ahead and get into this topic a little more. Just what the heck is EIP 1559? Well, every single transaction, very simply, is going to now have a base fee in Ethereum. So there won't be any more of this having to bid in the way that we're doing it right now with Ethereum. You will simply have a base fee that you can pay to miners, or of course to the validators when proof of stake comes on later this year, but a little more on that in a moment. So we'll have this base fee, and this base fee will be burnt. So every single transaction on Ethereum, that base fee is going to be burnt, removing the supply from Ethereum. So essentially what this is doing is totally changing the economics of Ethereum, because we're going from a situation where Ethereum right now has an unlimited supply. There is no supply cap for Ethereum. Bitcoin's got the great meme value of having 21 million Bitcoin, ever max hard capped asset. Ethereum has often had the criticism from people that, well, Ethereum doesn't have a hard cap to the supply, so it's just going to keep going up and up and up and up and up forever, thus making it not a good store of value. EIP 1559, the fee burning, is potentially going to make Ethereum a deflationary asset, where we could actually start seeing over the next couple of years, as the issuance of Ethereum falls and the transactions on the network continue to rise, a situation where Ethereum will start having a negative yearly issuance, basically meaning that every year there will be less and less Ethereum available on the markets, because we're just going to be burning so much Ethereum. The more popular the Ethereum network becomes, the more Ethereum will be burned. This completely changes the game for Ethereum when we talk about it as a long-term asset. I mean, it was already incredibly bullish because it's the epicenter of DeFi, the epicenter of NFTs, the premier smart contract platform with the most users, the most active addresses, all that fun kind of stuff. But this takes it to the next level. What we're talking about here is Ethereum completely just taking on Bitcoin in an economic sense, where it will now be a deflationary asset, not an inflationary asset. So this is really, really big when we start to talk about the economics here for Ethereum. In a lot of ways, EIP 159 and really just the entire upgrade process coming for Ethereum, Ethereum 2.0, the move to proof of stake, all that stuff, this is bigger than the Bitcoin halving, because Ethereum is such an important network in the cryptocurrency space. But not everyone is excited about EIP 1559. The miners have not been happy about this at all, because they're going to get hit big time on their bottom line. You see, the fees being as insane as they have been recently, the miners have been loving that because they've been making a freaking killing. EIP 1559 is going to significantly cut into their bottom line because all those burnt fees should have been going to miners instead. Now, I'm pretty excited about this upgrade because it's changing fundamentally the way that Ethereum is operating, particularly when we bring in the coming proof of stake changes. You see, the miners being so upset about this, they even made some threats that they were going to attack the network or have a show of force where they all put their power into one mining pool that could, in theory, attack the network, just to say to the developers and to the users, like, hey, we're the bosses here, back down, know your place. Well, the developers did not appreciate that at all. The community, of course, is not very excited about it either. So the developers are now pushing through proof of stake to come in for Ethereum. That means that by the end of the year, we could have a situation where Ethereum has transitioned away from proof of work and is now a proof of stake blockchain. And we also have EIP 1559, which will be burning a little bit of Ethereum on every single transaction. Now, we bring these two forces together, it makes Ethereum into an unstoppable force, and the economics of the entire Ethereum network are changing in a dramatic way. Because when you take the miners out of the equation, and look, I'm not anti-miner. Miners are unsung heroes in a lot of ways of proof-of-stake networks, so they're out there putting their money on the line, doing the work, doing the mining. But the reality is, proof-of-work mining is finishing for Ethereum, and I think the sooner the better, because it makes Ethereum into a more user-centric blockchain instead of a miner-centric blockchain where they're the ones in charge of things, so to speak. We put the developers and the users actually back in charge of the network with these coming upgrades. And with proof of stake, we are turning it from a mine and dump economy into a stake and hodl economy. You see, because right now, miners, they mine Ethereum and then they sell it because miners, largely, they're running cash businesses, right? They're not here for the long term of the network and all that stuff. I mean, yes, some of the miners are, but for the most part, what these guys are doing, they mine Ethereum, they sell it for cash, they give it to shareholders and the companies and stuff like this. They're not actually holding this Ethereum as a long-term asset. Now, maybe some of these miners are going to be staking Ethereum 2.0 and whatever, but for the most part, these guys are getting Ethereum, selling it for cash. They have electricity bills to pay. They need to buy new machines. And of course, again, as mentioned, they need to pay off those shareholders who are often involved in these big corporate interests, because that's what mining for the most part is nowadays, is giant warehouses in China and in Iceland and in Georgia mining Ethereum. Warehouses full of machines. It's incredible stuff. It's not just your dude at home with a couple of GPU cards mining a bit of Ethereum in his basement. I mean, that exists too. And I like those miners much more than the giant industrial players, but the industrial players realistically are the guys who are now in charge of the Ethereum network. They control the majority of the hash rate. Those guys mine a heck of a lot of Ethereum and they sell it in the market all the time. Now, Ethereum has managed to go from $200, let's say $270 to $2,700, 10x in the last year with all of this continual selling pressure from miners. Now, what happens when we completely change this economic situation? We take the miners out of the equation. We bring in stakers. So those people doing the proof of stake will be then putting their Ethereum up, locking up large amounts of Ethereum. We already have, I think, 4 million Ethereum in the ETH 2.0 staking contract. Then when you get your rewards from staking your Ethereum, you're then incentivized to not just go and dump those immediately on the market, because you don't have to be paying big mining fees, big electricity fees, getting new machines and all that stuff. You can just keep it running on a very, very low footprint electric-wise. So it's very cheap to be a staker, where it's very expensive to be a miner. So stakers don't need to continually sell their crypto. They don't need to sell their Ethereum. In fact, they're incentivized to hold that Ethereum and continue to restake it and restake it and restake it to get more and more rewards. And I think that's what a lot of stakers will do. So we're going to have this situation where we have stakers coming in and hodling their Ethereum, restaking their Ethereum. the selling pressure is going to totally freaking dry up. And then at the same time, every single transaction is going to be burning a little bit of Ethereum. We're talking about millions of Ethereum a year potentially being burnt here. This is a dramatic economic shift for the entire Ethereum network, and it's going to have a big price impact. And the crazy thing here is that you can still buy Ethereum for less than $10,000. It's going to go to $10,000. I have a strong conviction that Ethereum will be a 5-digit asset in the coming year, potentially. Might take a little longer than that, but it is going to go to $10,000 eventually. Just think about how big and important Ethereum is. It is a unit of account right now in a way that Bitcoin never really became a unit of account. So we're seeing people buying NFTs and using all these different decentralized finance services, and prices are done in Ethereum. Ethereum is also a massive medium of exchange, and of course a medium for allowing for mediums of exchange like USDC and USDT and all this stuff to be able to be moved around. It's the beating heart of the cryptocurrency industry right now. It's got the most users, the most developers. We're starting to see big money really start to click on to Ethereum. Whale addresses for Ethereum are at all-time highs right now. We're seeing hedge funds and all these other types coming into the Ethereum market. Ethereum is essentially presenting itself as the premier internet bond. I mean, think about this. It is a new asset class completely. Cryptocurrencies are complete new asset classes. So if you take this to a traditional investor and say, hey, here's this Ethereum thing. It is this incredible network where it's just this Cambrian explosion of innovation happening. And you can take these assets, stake them, and you will get more of these assets paid out. The staking rates are good, and it's a deflationary asset that's going to go down over time. Now you compare that to stocks. I mean, it's got a lot of advantages because your Apple stocks or your Intel stocks or whatever, they don't pay out in more of themselves, and they are not deflationary necessarily, which always lost stock buybacks and stuff like this. And essentially EIP 1559 is a stock buyback mechanism. But this is going to be a big value proposition for those investors. And now that we have Ethereum ETFs, 3 of them now in Canada, big money, it's never been easier for them to get a piece of the Ethereum pie. So EIP 1559, it's going to be a big deal. This is the self-destruct mechanism for Ethereum. Going to be taking a little bit every single transaction, burning it away. Proof of stake's coming. It's going to be a big year for Ethereum. I remain very bullish in that we are going to see that 5-digit Ethereum potentially happening this year. But what do you think? Is a $10,000 Ethereum a little bit too crazy? Is that just a little bit too much hopium? Has Lark been hitting the bong a bit too hard these days? Or do you think that a $10,000, a 5-digit Ethereum, it's programmed into the matrix and it's going to happen? Let me know down below in the comment section. Thank you so much for watching today's video, and peace out till next time.